Good morning, everyone. Thank you for joining us today. For those of you who I might not be familiar with, my name is Moti Good. I'm with ACFID. I'm part of the Business Operations and Services team. We are very pleased to be bringing this session to you today, the FX Markets Update in collaboration with our partner Stonex. Stonex and ACFID have been in a corporate partnership for 2 years, and we've held a long-running relationship between the two organisations for many years prior. And some of you who might have attended some of our ACFID national conferences might be familiar with the name. To start off with today, I'd just like to do some quick housekeeping. For those of you who might not be familiar with Zoom, you have got at the bottom of your screen, there is a chat box function. If you have any questions throughout the session, you can go ahead and drop them into the chat box there, and our speakers will come back to them later on throughout the session, or they may actually circle back and drop a response to you during the session as well. If you're on a mobile phone, you can also click on the Ask a Question button and start typing on your phone. If you're having any issues with your computer audio, you can also click on audio settings and test speaker to check if your speakers are working. If you don't see any buttons on your screen right now, just move your mouse and they should pop up. Finally, if you could just make sure that you have got your microphones on mute throughout the session, just to reduce any conflicting background noise for our speakers. And finally, a quick reminder that this webinar will be recorded and uploaded to ACFID's YouTube channel in the following week. So keep an eye out for the recording link, which will be sent to all of our attendees as well. If you would like to opt out of the ACFID attendee register for this session, please ensure to send an email to learning@acfid.asn.au. I'll drop that email address into the chat here as well to have your name removed from the attendee list. So with that out of the way, let's get started. I'd like to start off by acknowledging the traditional custodians of the lands on which we are meeting here today. Here in Canberra, that's the Ngunnawal people and the Ngambri people. And I'd like to extend this acknowledgement and pay my respects to the traditional owners of the lands across Australia and of course, indeed beyond, and the lands that we're all joining from today, and by paying my respects to their elders past, present and emerging. We at ACFID acknowledge their ongoing connection to the lands, the waters and the skies surrounding us, and the deep wealth of knowledge that they have. The ACFID Council stands in support of the Uluru Statement from the Heart. And for those of you who may have been around with ACFID or with your member organisation for some time, you may recall that the ACFID Council passed this resolution back in 2017, shortly after the statement was delivered to the Turnbull government. And as we are approaching this time of year and the upcoming federal election, ACFID will be standing side to side with a number of other community organisations, as we will be calling on the incoming government to consider the Uluru Statement and a referendum. So with that said, I would like to move on to the next slide, please. And we've already gone through this one. Move on to the next slide, please, and introduce our speakers for today. Joining us from Stonex, we have got Michael Stakowiak and Timothy Payne. Michael is the Head of Business Development for Global Payments in Australia and New Zealand, and Timothy is the Head of Trading for Stonex Global Payments. I'll hand over to them both now to introduce themselves quickly.
Hi, everyone. It's nice to see so many familiar names in the chat, and thanks, Moti, for the introduction. It's a pleasure to be here again. This is our first time, I think, running this particular session, but I think it might turn into a bit of an annual event, just given the level of interest and, I guess, appeal. I think it's quite timely too, budget forecasting time. We quite often get queries from clients asking us for projections, thoughts about where currency is going, and we just thought, look, let's put it out there in an open session. A lot of people want to know this sort of information, and we got some great people working here that have some insights, like Tim, who I'm really glad to have with us today. Tim, I don't know if you want to just give a little quick intro about yourself.
Hi, Michael. Thanks. So essentially, I hit the trading desk in Singapore here for Stonex Global Payments. So yeah, it's a pleasure to be here, and thank you.
Great. Thanks, Tim. So kicking things off, we're going to give just a quick overview of Stonex Global Payments. Just for those who aren't familiar with us, I think most of the people on the call are, but just for the sake of those who aren't, I'll give a quick little overview of who we are, and then we'll delve straight into the update from Tim, where we'll be focusing on primarily projections for sort of the primary currencies that ACFID members tend to work in. So the way we sort of structured that was we actually looked at the ACFID survey results to see what are the top 10 countries that ACFID members are working in, and we tried to focus on those currencies in particular. So something like US dollar is very, very used across a whole lot of markets, so that covers a whole bunch of countries. But then you've got a few places like say Bangladesh, which we're going to talk about a little bit, which I think was quite a surprising inclusion, not something I was aware of. It was definitely in the top 3, but yeah, something we're going to chat about because apparently a lot of members are working in Bangladesh at the moment. We do see that from our clients. We didn't realize it was top 3, but yeah, so interesting results. We'll delve into that a bit after the overview, and then a Q&A session at the end. So if there's anything we haven't talked about that you were hoping to get out of the session, that'll be a chance to ask us while we're here. I don't think we're going to go for the full hour either. I think this might take 30, 40 minutes at the most, depending how many questions we have. So let's see where things end up. So just a quick overview of Stonex. So the broader group is mainly a diversified financial services organization that's doing a manner of commodities trading, clearing execution services, hedging, global payments, the team that I work in, that Tim works in as well. So the company has a history going back almost about 100 years, publicly traded on the NASDAQ in the US, Fortune 100 company. It's this large organization, but the global payments team that we work in that works with ACFID is actually quite a small team in relation to that. But yeah, we do sort of benefit from sort of that, having that larger presence behind us from sort of a security standpoint and credit standpoint as well. It allows us to sort of do what we do in a lot of these places. The global payments team itself has been around for say 30 years thereabouts, and a lot of it started out in sort of the sub-Saharan Africa region, where sort of the founders came out of Standard Bank and they were working with a couple of the large charities, sort of UNICEF and likes, helping them to deliver funding into projects in the Africa region. And they identified the challenges that they were having in terms of delivering local currency into these markets. So they decided to go out on their own and start up their own business and solution for this. And that eventually was bought out by Stonex, or former INTL FC Stone, and has sort of evolved to being not just only Africa, but then effectively covering the entire globe in terms of our currency access. So what makes us a little bit different is that we have our own network of correspondent banks, local banks that we work with in each of these regions, which gives us a real advantage in terms of not just from a cost perspective, but from a knowledge and expertise. We know about all the market specifics, peculiars, any changes in regulation. We tend to find out, much faster. A good example is, when the events in Ukraine kicked off, we were very quick to sort of react to that. We almost were proactive in our actions there to sort of stop allowing transfers to go into Russia and Belarus. Initially, there was a pullback in Ukraine, but now we are facilitating transfers back into Ukraine just because of the overwhelming demand for aid and development into that region. But and that's sort of the overview there. We got about 140 odd currencies that we provide access to, 170 countries. We're doing upwards of $3 billion a month in turnover at the moment for payments, up from I think the $2 billion a few years ago. Happy to say we've got about over 900 active aid and development organizations working with us across the globe, over about 50 in Australia now, and that figure's gone up substantially the last couple of years just for the overwhelming need and for our services. We've also got we've got a handful of global banks, about 55 or so, that use our service to access a lot of these markets. So they're the sort of two spheres of the businesses we work with. We've got the aid and development community that we work with to access these markets. And then we also got the global banks like Bank of America, who might offer about 140 currencies as well. But say 70 of those are actually us behind the scenes. And that's the case with many of the largest banks in the world will use our service in some shape or form. And I'm happy to say there's also a couple of central banks using our service now to access a lot of these markets. Quick snapshot of just some of the clients. Look, names you're all probably familiar with, and you might look at these and think, okay, I've got some very big names here, but don't think that we work with all shapes and sizes of charities. They've got charities that have work in one country and only have a handful of projects. It's the same product and service for all our clients. So regardless of your size, you can take advantage of the economies of scale that we provide to not only the likes of the UNICEFs of the world, but also to the charities with the single needs. And we may not work with all these entities in Australia itself, but across the globe, we do work with various offices of these organizations in some shape or form. And then there's a quick snapshot of the currencies that we currently sort of offering to our clients. There's probably only a handful that we can't sort of provide access to. There's probably been a couple that have fallen off that list even just for various geopolitical reasons. Myanmar is a good example, one that we were very active in, but just for, I guess, challenges in terms of delivering local currency there has been temporarily suspended, but one that we were quite active in as well. Afghanistan's another good example where we had extensive capability in, but they had to pull back due to the events that took place there. But these are all markets that we're actively monitoring and keeping tabs on to sort of re-enable for our clients when the time is right and when that's possible. That's it from me. So I'm going to hand it over to Tim now, who's going to give you the interesting stuff, the stuff we've all come here to hear. So Tim, I'll throw it over to you.
Thanks, Michael. So just give me a quick second. Good morning, everyone. My name's Timothy. So as I mentioned, I handle the trading desk in Singapore for the global payments team. Some of you might recognize me from the last ACFID webinar we did about 2 years back. And I wanted to thank everyone again for joining and be willing to listen to me yammer on. So before I kick off my segment, as usual, I need to highlight some of the figures you'll see in the next few slides, Bloomberg forecasts, and some are personal ones. So please don't take them as trading recommendations from Stonex. And without further ado, I'll jump into a few currencies of interest and macroeconomic events that might influence foreign exchange moves over the next year. So starting off with Papua New Guinea. The Papua New Guinean kina has been operating on a soft peg versus the USD for the past few years. So what this means is that the kina is generally kept stable via central bank actions, where local banks are unable to trade outside of a central bank determined band, about 3.5% currently. So this means that on a regular trading day, any Aussie dollar kina rate fluctuations are determined by moves in the Aussie dollar USD rate. And this will be impacted by the factors mentioned in my latest slide on the Aussie dollar. So the current interest rate set by the central bank is 3%, which has been at this level for 2 years since April 2020, when the Bank of PNG cut the interest rate from 5% to help the economy deal with the impact of the coronavirus. And below that, you can see some forecasts for the Aussie dollar PGK. However, Bloomberg does not have a forecast for this currency pair, so these are my own indicative levels. Once interest rates in this island nation begin to rise, however, and perhaps return to pre-COVID levels, these forecasts will invariably change, especially when you contrast their initial 2% cut versus Australia's 0.5% cut to combat the economic effects of COVID-19. Next up, we have Bangladesh. So the Bangladeshi taka is controlled by the Central Bank of Bangladesh in what is called a managed float. Where it differs from the PGK is that the local banks do have some flexibility in bidding for dollars, and there is no official FX trading band. This is why you tend to see more fluctuation in Aussie dollar BDT rates as you deal with volatility in both the Aussie dollar and the Bangladeshi taka. So latest inflation figures for Bangladesh show a month-on-month increase of 5.86% to 6.17% just last February. It's certainly not runaway inflation, but I wouldn't rule out rate hikes in the fourth quarter of this year to combat rising prices if this trend continues. The central bank reference rate is currently 4.75 for this currency, down from 6% in 2020 before the pandemic hit. So similarly to PGK, there are no Bloomberg forecasts for this currency pair. So these are my indicative forecasts, and we see a gradual weakening of the Bangladeshi taka through 2022. Next, for Vietnam, the currency has proven to be one of the most stable in Southeast Asia the past 2 years, with the economy having grown more than 6% in the past 2 years, despite the impact of COVID-19. This is largely driven by a shift from being an agricultural economy towards electronics manufacturing and assembly, particularly since they had large investments from Samsung. So given inflation figures are much more manageable levels at Vietnam, 2.4% thereabouts currently, I don't foresee any imminent interest rate hikes, while the government pursues a shift towards manufacturing and experiences the corresponding economic growth. Given there will be a wider forecast interest rate differential if the Reserve Bank of Australia hikes in the second half of this year as expected, we see a Bloomberg forecast also showing an expected increase in the Aussie dollar VND rate over the year, going above 17,200. And next, now on to what's near and dear for most of you out there, the Aussie dollar. So the RBA, in its latest meeting just last week on the 5th of April, maintained the cash rate at 0.1%. Notably, however, Governor Philip Lowe's statement had removed the phrase that the RBA was prepared to be patient. So what this meant was market watchers took this as a signal that rate hikes are likely expected, perhaps as soon as the next meeting. So on the back of that, well, not really on the back of that, energy prices you have also seen climb, right? As many economies worldwide begin to open up after coronavirus lockdowns, and economic activity begins to gradually return to normal. However, the Ukrainian invasion added more fuel to the fire of rising energy costs, no pun intended. Russia has been hit with numerous global sanctions, escalating sanctions, and while it's well documented, the EU's woes relating to its natural gas supply from Russia, it's also worth noting that coal-fired plants still operate in Poland and elsewhere. Therefore, some European countries are also looking to buy non-Russian thermal coal, and this has caused a significant premium in non-Russian coal to appear. So here's a brief rundown of Australian coal prices just for references. You can see that since in December, it was $55 per ton of thermal coal. And 1 year later, it was $146 per ton. And just after the invasion, it's more than doubled, and it's $350 per ton. So what has that got to do with the Aussie dollar? Well, the increase in commodity prices lifts demand for the Aussie dollar, though at the same time, higher energy prices also get passed on to end consumers, contributing towards inflationary pressures in the domestic market. And these factor towards the RBA hiking, I would say sooner rather than later. So below, you see the Bloomberg forecast for the Aussie dollar going out to first quarter 2023, and a general slight appreciation of the Aussie dollar versus the US is seen. Note that this is despite the US Federal Reserve indicating their preference for numerous hikes this year and into 2023. As we know, just because a country lifts its interest rate, it doesn't mean that its currency becomes stronger automatically. So with this, I've come to the end of my section. I guess we're more than happy to welcome some questions here, and thank you.
Thanks, Tim. Hopefully that was give people sort of what they were expecting, but look, here's your opportunity to ask any questions, anything else that people were keen to hear about, our thoughts, our views on any particular markets that you're working in now, any geopolitical events. I mean, we can sort of talk about the influences occurring in the world. Tim's very close to a lot of these issues on a day-to-day basis, so definitely a great opportunity to step up and ask any questions you might have. Okay. I knew
got a
this question.
Yeah.
I knew this question was coming. So we just had a quick question regarding Myanmar exchange rates. I think there was some information that came out recently about use of US dollars and Thai baht. So perhaps, Tim, I don't know if we just want to give just like a quick little overview of what happened, what's sort of recap of what's happened in terms of Myanmar from our perspective and what we're sort of seeing today.
Sure, Michael. So for Myanmar, what we have seen so far is a general reluctance by the general population to use very much of the local banks. I think this was because when the military just took over, withdrawals were frozen. There were lots of cash lines at the banks there, and people who held funds, Myanmar Chat, in their account weren't able to access very much of it. So guidelines have changed as recently as I think about 2 weeks. One to 2 weeks ago, we saw a headline where the Central Bank of Myanmar has decreed that all foreign exchange currencies are meant to be exchanged in local currencies. What I see this as is the central bank or the military that controls the central bank is trying to gather as much US dollars or hard currency that they can and use it for their purposes, right? And locally they say you have to convert it into Myanmar Chat, so they control the money supply in the country. They're able to print out the notes that they need and let people withdraw it. And on the other hand, they control the hard currency. So this is the latest development that we have seen in Myanmar. And at the moment, we are not supporting local currencies into the country, and we're still working on that. We're monitoring it quite closely, speaking to our locals quite regularly to find out when things can go back to normal. But at this current stage, I'm afraid local currency payments are still restricted, and the central bank is involved in almost every payment that's going cross-border, whether it's for US dollar, whether it's for local currency. They need to review, screen what are the supporting documents for this, and it's proven to be quite difficult to get any local currencies across, and that's why even our local partners, the local banks there, are saying no, we can't support this at the moment.
Yeah, and just to add to that, so we are currently assisting a number of clients with transferring of US dollars into the country. There's sort of also, I can't directly speak to it, but I know that some other clients working there also transferring Thai baht to some regions, also being used as an alternative currency. But yeah, with the sort of directive that came out a couple of weeks ago, the need to convert into local, the sort of consequences of that is there's just very little control over what exchange rate you can achieve. So inevitably those banks are probably taking advantage of the situation, probably charging a substantial premium. There was probably there was a very brief period after we lost the currency and had it reinstated that we did some analysis with one client where we could actually measure the premium that was being charged onshore by those banks when they converted the dollars to kyat. And I think it was upwards of 3-4%. So it's not ideal, but in the absence of any other method to deliver funding into the region, it's the only option for the moment, unfortunately. But something we hope that will change as time goes on. Thank you for that question. Oh, here we go, another one. Great, so interesting market here too. So we've got a question regarding forecasts for Sri Lanka and impact on currency given the current political tensions. I know Sri Lanka is a country in particular crisis at the moment, and something we have been monitoring. Tim, I know that we've been chatting about this recently. Maybe it'd be good to give a little insight on that as well.
Sure, thank you. So Sri Lanka is currently what I would say dire economic straits. They have been talking to the IMF for a bailout for quite some time. There's runaway inflation. From what I understand, they have 12-hour blackouts. There's no petrol in the petrol stations. So they have been hit by COVID-19, and the tourism sector has not, they have not been able to bring in the foreign currency that the country needs, relies on. So although the sector has opened up a bit, they're still they're still running a big. They have some big government debt due soon, and IMF projections discussions have put the figure at $51 billion that they need to keep afloat, to change things around. So that's a number that's been bandied about at the moment. Currently, the interest rates have gone up significantly. Used to be 300 versus the US dollar. Now it's 340 yesterday, thereabouts. So more than 10%, 13% you see. And it doesn't look like it's going to ease up for them anytime soon, I would say. So for those organizations that are sending currency into Sri Lanka, my little piece of advice is maybe do your just-in-time funding. Send over the amount of local currency that you need to run your projects, and not to hold too much local currency at this point in time. That's my view personally.
Yeah, no, I think that's a message that we sort of promote actively amongst our client base, to hold back what's possible and deliver just what's needed to sort of shield yourself from these fluctuations, the risks of holding any sort of substantial sums onshore with your partners or officers, field officers. But in terms of very specific projections, look, you're more than welcome to drop me an email after the call. I'll put my email up on the next slide, and I'll be happy to just provide sort of similar projections to what you saw on the previous slides for that particular currency as well. But thanks for the question. Have we got any more at this stage? Oh, there we go. Aha, very good. Yep, I thought this might come up as well. So the Fijian dollar, any thoughts or projections around the Fijian dollar? I know, very active currency for many members. Tim, what can you share about?
Thanks, Michael. So the Fijian dollar is quite stable. Some of you might know that it actually moves very closely in tandem with the Aussie dollar. So when the Aussie dollar is strong, the Fiji dollar is strong, and vice versa. So yeah, I mean, there's not very much to add on the Fiji dollar side, because it moves quite in tandem. It's quite closely correlated. So your Aussie dollar projections are, the forecast for the Aussie dollar will generally translate into Fiji dollar forecast as well. So yeah, I mean, I can run the Bloomberg forecast and see whether there's something else different, but I don't see anything currently significant going on now there.
Yeah, I mean, and look, it might seem a bit odd in previous slides where the projections were quite flat, but that's just because it's all so heavily driven by the Aussie-US projections, and they are showing a very flat projection over the next sort of 9 to 12 months. And a lot of these, it is very much a pinch of salt with these sort of projections. They are sort of in-house views, composite from a broad range of providers on Bloomberg, and all it takes is a significant, a black swan event like a COVID or a war in Europe to drastically change a lot of these. But we're just sort of dealing with what we know today. But that Aussie dollar projection is sort of the key one to focus on for, I guess, a market like Fiji is the message. But thanks for the question there, Dale. Thank you. I don't know if there's any others that people are interested in hearing about. The floor is yours. If I might throw a hard one in for you, Tim, but I know that Afghanistan was obviously one that a lot of members were sort of working in and inevitably had to cease action. But maybe we can just give sort of a recap of sort of the events that we sort of saw from our perspective and sort of where things are at today for that market.
Sure. So for Afghanistan, I would say, in my opinion, it's more difficult than Myanmar. Since the Taliban took control of the country, the US, hasn't formally recognized them, and because of that, the central bank, the Federal Reserve, has frozen the Central Bank of Afghanistan's US dollar assets. So the country is currently facing quite a dire situation. I would say they have their talk of starvation, and the biggest problem is you would assume that the country would be open to receiving cross-border flows, but the problem is that the country has an actual physical shortage of dollars. So one of the only ways that we know of getting money in is for people to actually carry suitcases of money across the border, and we don't have people who are actually flying into the country to do that, to deliver the physical notes. So a lot of these banks in Afghanistan, they have US dollar balances, but they can't utilize it directly, right? A local might transfer US dollars locally, but they can't really withdraw it from their bank. There are limitations. It's currently 5% of the balance a week in local currency. So if you have $1 million AFN in your bank account, that's your balance, you're allowed to withdraw 5% of that in a week. So this is how they control the money supply, how they limit the possibility of bank runs, or they control, essentially it's a control of the currency. So unfortunately, the situation doesn't look like it's getting very much better. And I mean, it's unfortunate. We are still monitoring this. We're still talking to the local banks every now and then to see whether the situation has changed. But until the more governments recognize the Taliban and they look towards really opening up the financial sector, I think it's going to be like that for a while.
No, I think it's a very challenging situation, and I think the Economist had a fantastic article on the topic a few weeks ago, where irrespective of the UN nations' efforts to encourage aid and allow for flow to go to where it's needed, and limit the inevitable crisis that's unfolding there, banks are still very hesitant from a risk perspective to facilitate those transfers. And it's all about, unfortunately, it does come down to sort of risk return, and the risks are just significant in terms of facilitating some of those. But we do attempt to assist where we can in these situations, and each situation is a case by case basis. So there are certain clients where we can sort of assist in some means, but one that we're very closely monitoring, and there's a particular interest to active members.
Yeah, just to add on to that, Michael. So we do see reports where where the US authorities say, okay, it's fine, you can send the US dollars over for humanitarian reasons and projects. But when we speak to the locals say no, it's not implemented yet. It's what they say, but to actually get the dollars in, it's not implemented yet. So it's a difference between what they say and what's going on in reality on the ground. Yeah,
I think a lot of the work that is occurring today is more about delivering funding into neighboring regions and then physically transporting goods across the border. That's sort of how the aid work we have seen. But actually getting it into partners in countries is next to near impossible in most cases. Okay, yeah. Thanks for your insights there, Tim. We do have another question as well, quite an interesting one, sort of a almost geopolitical question to a degree, with regional activities in the Pacific. Curious to see if we expect to see any impacts on the Solomon Islands dollar, exchange rates in particular there, given the negotiations between Australia and China. So I think this is in reference to the the agreement that took place there, and if there's any sort of fluctuations to expect as a result of that potentially, Tim. I don't know, what can we add?
I remember reading about how Australia has a police force in Solomon Islands, and people are a bit concerned about increasing China influence in the Pacific. I mean, to be frank, this has been ongoing throughout South China Sea and into the Pacific for a long time now, right? So I don't see that particular headline directly influencing foreign exchange rates, for example, unless things escalate out of control. And so far, from what I've seen, China has always stopped short of declaring war, unlike what Russia has done, right? So I think it's more of this. I wouldn't say harmless struggle, but more of this positioning in the Pacific to try to protect their interests. Especially, they have been investing in quite a few places in the Pacific. So I think being overly reliant on one country to invest in you is not a great idea. We've seen that in Sri Lanka, where they talked about the debt trap when the Chinese invested in the port. I can't recall the name, but the payment terms were supposed to have been very onerous, and that's why the Chinese effectively have control of that Sri Lankan port. So if you're too reliant on one country, I think it's not a great thing. So, but long story short, I don't think it's going to affect the Solomon Islands currency very much.
Thanks for the insights, Tim, and thank you for that question. I can't actually see who's asking some of these questions. Apologies if I don't call out your name. They're coming to me sort of indirectly. Yeah, if there's any others that people were keen to hear about, happy to put them out there while we got people. I think there will be a survey as well after this session as well, just to get people's feedback. Or did what we present align to what people were expecting? Were there certain things that people would like to see more of? Did we focus on the right currencies, the wrong currencies? I think given the questions, you can see that. Oh, there we go. Monty's put the survey feedback link. Your feedback does help us to sort of improve this content and make it more useful in future sessions. And as I mentioned at the start of the call, I think we will sort of turn this into at least an annual event. I think we got the timing right. I hope we did. But if there is a better time of year to do this type of talk, please tell us in the survey, because that's something we can very easily change, adjust. I just know that at this time of year, we've had a few requests for projections to this sort of budget forecast time. But if it is something that would be useful to see sort of twice a year even, please let us know. It's not a lot of it. It's not much of our back to provide these sessions. I just want to make them as useful as possible to members. I think that's it. I don't think there's any more questions coming. So look, thank you very much, everyone who joined. Really appreciate your time and coming on board. I hope you found the session useful and informative. As well, if you want to get any sort of specific projections that we didn't provide today, my email address is on screen there, as well as Tim's. Just feel free to drop us a note, and more than happy to send that over your way. If you want to learn more about the services we offer as well, happy to have a chat about that. If that's something you're interested in learning more about, as I said, we do work with lots of active members today, but it's sort of got a broad appeal in terms of what we offer, hopefully. But look, I think from here on in, we'll probably be at the hopefully in-person ACFID conference later this year. I was just joking to Moti that I've done so many of these virtual events, I might be a bit rusty. I can't remember the last in-person event I've done. So I'm looking forward to that, and hopefully seeing people in person later this year. But that's a thank you from me.
Thank you, everyone, for your time today. I hope I didn't bore you too much. Thank you for having us here. It's a pleasure.